Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into the world of proprietary trading. It's one of the most talked about corners of the modern trading world, especially with the explosion of funded accounts and online prop firms popping up in the past few years. But with that hype comes a lot of noise and, frankly, a lot of myths. If you've ever considered joining a prop firm, or you're just curious about how it all works, today's episode is for you. We're cutting through the fiction and getting into the real story behind prop trading. I'm going to break down 5 of the most common myths floating around out there and tell you exactly what's true, what's exaggerated, and what you need to know if you're serious about making prop trading work for you. Let's start with the big one. Myth number 1, prop trading is easy money. This one's everywhere. You see the ads, get funded in a week, or trade a $100,000 account with no experience. Sounds great, right? But the truth is, prop trading is not easy. It's not a shortcut to quick riches. The fact is, passing a prop firm evaluation and staying consistently profitable takes serious skill. Just because you've got access to someone else's capital doesn't mean you'll automatically make money. If anything, it raises the stakes. You've got strict rules to follow, tight drawdown limits, and zero room for reckless decisions. The traders who actually succeed treat it like a business. They show up every day with a plan. They manage risk down to the decimal. They don't gamble. They don't chase losses. They do the hard, unglamorous work of being consistent. So no, prop trading isn't easy money. But with the right mindset, it's a real opportunity. Myth number 2, you have to gamble to pass a challenge. This one is especially dangerous. Because of the time limits in most prop firm evaluations, a lot of traders think the only way to hit the profit target is to swing for the fences. Go big or go home, right? Wrong. Gambling your way through a challenge might get you through once, but it won't keep you funded. And trust me, prop firms can tell the difference. They're not just looking for someone who can get lucky. They want traders who can stay consistent, and that means knowing your edge, controlling your risk, and not blowing up after one bad trade. The best approach is this: trade the exact same way you would with real capital. Small risk per trade, clear setups, no revenge trading, and no chasing unrealistic daily gains. If your strategy wouldn't survive long-term in a live account, it won't survive in a prop firm account either. So forget the gambling mindset. You're not here to get lucky. You're here to get funded and stay funded. Myth number 3, all prop firms are scams. Let's talk about this one. Because yes, there are shady prop firms out there. There are companies that disappear with your evaluation fee. Firms that change the rules mid-challenge. Firms that delay or deny payouts. It happens. But that doesn't mean the whole industry is a scam. There are plenty of legitimate, transparent, and broker-backed prop firms offering real opportunities to serious traders. These firms clearly explain their rules. They pay on time. They scale your capital as you prove yourself. They want you to succeed because your success is their success. So how do you separate the good from the bad? Do your research. Look at their terms. Ask real traders for reviews. And look for firms that are open about how they operate. If a firm won't tell you who's behind it or how they make money, it's a red flag. If a firm is backed by a regulated broker, even better. Bottom line, not all prop firms are scams, but it's your job to know who you're getting into business with. Myth number 4, you need a huge amount of capital to get started. This one keeps a lot of good traders on the sidelines. They think, well, I can't trade seriously until I've got $25,000 of my own saved up. And sure, if you're self-funding, that might be true. But that's the whole point of prop trading. Prop firms exist to give skilled traders access to capital without needing to put up tens of thousands of dollars. All most firms ask for is a one-time evaluation fee. In return, if you pass, you're trading a funded account, sometimes $50,000, $100,000, or more. Think about that for a second. You risk a few $100 to potentially control 6 figures of capital. That's a powerful model if you're ready for it. So no, you don't need a big bankroll to start. You need a strategy, discipline, and the ability to manage risk. The capital comes later. Myth number 5, prop trading is just a short-term gig. I hear this a lot. That prop trading is a stepping stone, a way to make a little money before you graduate to real trading. But here's the truth. For a lot of traders, prop trading is real trading, and it can absolutely be a long-term career. Some traders stay with prop firms for years, even decades. They build consistent track records. They scale their accounts. They treat it like a profession, and they get paid like professionals. The firms that value their traders don't just hand you a funded account and say good luck. They invest in you. They offer scaling plans. They reward consistency. And they give you the tools to build a real, sustainable trading career. So if you've got the mindset, the skills, and the patience, prop trading isn't just a phase. It's a pathway to professional success. Final thoughts. Prop trading is growing fast, and with it comes a lot of hype and a lot of misinformation. But if you cut through the noise, the real opportunity is still there. You don't need to be rich. You don't need to gamble. You just need to be prepared. Treat it like a business. Understand the rules. Manage your risk. And most importantly, focus on consistency, not shortcuts. If you're looking for a prop firm that's transparent, broker backed, and built for long term success, check out crystalballmarkets.com. They offer funded trading programs designed to help serious traders grow with fair terms, fast payouts, and real support. Thanks for tuning in to Financial Market Insights for Traders. I'm Sophia, and I'll see you in the next episode. Until then, trade smart, stay disciplined, and keep learning.